Hello and welcome to another episode of Darwin Investors. So here recently I've run into some people, they like to watch my videos, but they don't exactly know what I'm doing or how it is that I'm making the money. And so I'll say certain things and they don't quite understand. Today's video is an attempt to explain exactly what I'm doing at all times, whether I'm selling the puts or a trailing stop, or why I'm just buying shares and not buying calls, or why is it that or what are all those things. And so that's what I am going to attempt to explain today. And so I've noticed that here recently there's a lot of YouTubers that are, and my heart goes out to them. They're losing a lot of money, and I don't mean to laugh, but they're losing money and they're, having to delete comments or whatever, like shut down comments, and they're having to go on mental health hiatus, or, say they don't post for several weeks, or they'll come back after like a month and say, this is the reason why I've been gone. And a lot of them are losing quite a bit of money at the time. And I think that basically they feel that their subscribers are losing money and it's their fault and they're catching a lot of grief in the comments. That should never be the case. Like when those guys post stuff, they're not telling you to do what they're doing. They're just telling you what they're doing, and that's what I'm doing right now. But like right now, of course, I'm making a lot of money, and I was going to go ahead and show this strategy about what I'm doing, but I'm not telling anybody else to do it. I'm just saying that how I'm doing it and how I'm making money. And on YouTube, I'm like the only one making money, I think, right now. Everyone's like, you'll see the little thumbnails, like fire everywhere, maybe like a nuclear bomb or whatever just went off. But no, I'm making money in this market. And then what I'm going to do is just kind of explain how I'm doing it. And again, I will not always make money doing this. I will occasionally stub my toe and not make money in the market. So let me go ahead and share my screen and just show you what I'm talking about here. And then I'll explain what exactly, I'm doing, exactly how, walk step by step about how I'm making the money. Because like people come up to me, they're like, I like your videos, I just don't understand how you're doing it. And so, and I always thought, well, maybe you can like look up how to do this stuff, like how to sell a put, how to do the trailing stop, how to do the different things that I do. And you can, but you don't get it all in one nice little consolidated package the way I'm about to do it today, and just kind of walk you through exactly what every little step that I'm doing. So you can see that so far in this month, here from January 31st to February 11th, I've made $4,695. And this month ain't over yet. I'm making more. I'm making a bit next week too. I see some really great looking potential trades coming up. And remember, they're trades. This isn't investing. I'm trying to make some money. I'm trying to grab some cash on the way down. I don't mind myself a bear market. And if you look here for the year to date, what have I made this year to date? I don't even know. I've made $8,092 so far this year. But remember, I'm still down 5.75% for the year. And that's only in unrealized losses. So this is the money that I've made. And then I also have unrealized losses of 5.75%. Now, these losses, this is on like Microsoft, Google, Lowe's, NVIDIA. I'll be the same age. I am never selling those at a loss. I'm telling you right now, unless something crazy happens to those companies, I will never, ever, mark my words, ever sell those shares for a loss. Because I don't care if I'm the same age as the freaking Queen of England, I will not sell those shares until I'm up. And that's the difference between an unrealized loss and realized gain. Now, there are some times when I'm just plain wrong about something, and you have to be humble enough to say, you know what, I goofed, whatever, I lost, I'm wrong. I'm not wrong about Microsoft. I am not wrong about Google. I am not wrong about Lowe's. I am not wrong about NVIDIA. They will bounce back someday. It may take several years, but they will bounce back. In the meantime, I have this strategy to make money to kind of keep me afloat. So let's go ahead and go over my earning strategy. So in my strategy, I don't really ever hold cash, but I do hold cash. So I've got cash that I have set aside. And depending on market sentiment, a certain percentage of this cash goes into executing trades or exercising trades. So when it's like super bullish and everybody's making money, then I put everything into like, high grade investment stocks, or sometimes not even sometimes just crazy wild. If the sentiment says, hey, those 20x price to sales stocks are making money, get into those. I'll get into those. I'll follow the trend. I will sniff out the money like a truffle pig. I will figure out where that money is and go get it. But right now, the money is in the value stocks. That's where you have to go. But the day will come where I'll go back to that if that's where the money is. And so right now, I'm holding a larger cash position that I will put into trades. And I'm going to try and execute these trades and make as much money as I can throughout the earnings season. And then the earnings season as far as I'm concerned, ends in a couple of weeks. And then I'll have to good look at the market and decide where to put the money. But for now, I'm just like rolling it from one trade to the next, to the next, to the next, trying to make money. And so far this month, I'm up like, I think it was like 4,000 something. And then by the end of the month, I'd like to be up about 8,000 this month. Okay, so how do I do it? Well, I buy the shares. I never buy calls. And I'll show you in a second why I don't like to buy calls. And then after that, I sell a put. And this is the part that gets people a little bit crossed up, is selling the put. First of all, they say the word put, and they think automatically that that's a bearish or down market thing to do, but it is not. It is a bullish strategy. When you sell a put, you're saying if the price falls below a certain price, not only will I buy a share, I'm on the contract to buy 100 shares of that if it falls below a certain strike price. So that in the put, you've got a strike price, a time to expiration, and a premium. I buy the shares, which is the ultimate bull strategy, much more bullish than just buying a call. And so let me go ahead and show you what that looks like real quick, and why I don't buy the call, and what it looks like to sell the put. And so we're going to walk through this really slowly here. Let me go to trade. And since my most recent one here is Advanced Auto Parts, and like, if you saw the video that I put out yesterday, it looked like I feel have Men in Black knocking on my door, looking around the place for a crystal ball, because it looks like everything I did yesterday worked out really well, and it did. Some days sometimes it's like that, sometimes it's not like that. But yesterday it was one of those days where today ended up being a very fortunate day for me. So here's Advanced Auto Parts. So let's say I'm going to sell a call on this. And now this is going to require a little bit of math. Let's say I'm going to buy a call. Buy a call. When you buy something, you want time to expiration to be long. You don't want to buy something short term. You sell stuff short, like you want to sell something. You want it close to expiration as humanly possible. And when you buy it, you want it to be further out. The reason is different forces are at play that help you. And I'm not going to go into what they are in this particular video. But when you sell, you want the buyer to run out of time fast. And when you buy, you want to have plenty of time for your trade to work out in your favor. So I always sell. I don't like to buy. And let me show you why. So first of all, when I buy, I would probably buy something like the June 17th call on Advanced Auto Parts. And then when you buy a call, you want it in the money, which it already is at 220. And then to buy this would cost me $1,870. Well, what does that mean? That means by June 17th, this price of Advanced Auto Parts for me to break even needs to be $220 plus $1,870, and that breaks me even, meaning that it has to be $238 So why don't I buy calls? Well, because if I like the price and I like the company, then why do I want to pay $238 for something when I could pay $222.94 for the same exact stock? Like, to me, this is throwing away money. The only exception would be something like a cruise line or something like that, where you think the business has a chance of going bankrupt or something like that. And you want, so in this way, I would hold 100 shares. I don't hold the shares, but I hold the right to buy the shares for $1,870. I didn't spend $22,294 on it. I spent $1,870 to hold the right to buy 100 shares. So if it's something like a cruise line and we don't know if they're going to come back the same way, we don't know if they're going to go bankrupt, we don't know what their business is going to be like, but all we do know is that today's price, it's a good price. And even if you add a few dollars to Carnival Cruise, it's still a good price, provided they don't go bankrupt. So I don't buy calls on stuff like Advanced Auto Parts because I don't think they're going to be going bankrupt anytime soon. I'd rather just have it at the price it is now rather than $238.70. And that's why I don't buy calls. I buy the shares. And so when we sell the put, then remember, it's a bullish trade. There's a strike price, a time to expiration, and a premium. So for selling the put here, let me go ahead and try not to reveal all my account information here, and I don't exactly edit. All my stuff is uncut and rough. And so when I look at Advanced Auto Parts here, I recently, let's see here, Advanced Auto Parts. Let me do just current because I tend to work this trade a little bit every now and again. So for this one here, I bought the shares for $223.98. I sold a put for $299.35, or $3 a share, right? So when you sell a put, you're getting the right. I'm getting control of 100 shares of this stock. And someone believes that it's going to finish $3 lower at least than where I bought it by the time of expiration. So what does that mean? I sold the put for $210. That's the strike price. It's got an expiration date, which is February 18th, 2022. And I got a premium of $300, or $3 a share. What does this mean for my trade? Now, what have I done? Okay, so I bought the shares for $223.98, but I sold the put and collected $300, bringing my price to $220.98. So my selling this put lowers my break-even point. So even if Advanced Auto Parts disappoints, so long as the price of the stock doesn't dip below $220.98, I still get away with this with a profit. And that's the power of the strategy, is there's a little room for error here. So like I just showed you, Advanced Auto Parts, I bought the shares for $223.98. I sold the put for $300, which gives me control of 100 shares of stock, and it gives me a $3 a share in premium. So that my break even is now $220.98. So where there's a seller, there's a buyer. So someone has to win and someone has to lose. And this is a zero-sum game, basically. And so sometimes you're going to lose, but you try and put yourself in a position where you're probably going to win. And then in case I had a bull thesis for Advanced Auto Parts. So I look at Advanced Auto Parts and I say, how many parts suppliers are there in America? Well, we've got Advanced, we've got AutoZone, O'Reilly's, and Napa, basically. You got to get from one of those four. Okay. Well, what about the price of new and used cars? Well, it's going through the roof. Okay. So now people are fixing their cars more than they used to. Um, what about, are they for just consumers like you and me walking in there as hobbyists, or do they sell to businesses? Well, they're selling to businesses too. They've got businesses all over the place. And so there's a big bull thesis for this. What about other companies like it just reported earnings? Well, O'Reilly Auto Parts was lights out. There's no reason to believe me for me to believe that Advanced Auto Parts for some reason isn't going to be lights out. And so for all these reasons, I'm bullish on Advanced Auto Parts, and they report earnings on Monday, and I expect that that stock is going to go up in price. And so what I do then is I've bought the shares, I've sold the put. I don't believe that Advanced Auto will go below $210. I think it's going to finish above it, and I will get all of that premium. Then I wait for the earnings report. After the earnings report comes out, I have a decision to make. Is this a trade or is this an investment? In the case of Advanced Auto Parts, it's a trade. I'm trying to make money while this market is on the downslide. So because for me it's a trade, I set a trailing stop. And I set the trailing stop for usually about 1 or 2%, but honestly, almost always 1%. If it's a hold, let's say it's Lowe's. I don't have any intention of letting go of Lowe's. Let's say it's a low, it's a hold, something that's one of my investments, or let's say it was Microsoft. I'm not letting go of Microsoft either. Then what I'll do is I do a covered call on that because I'm not looking to get rid of those shares. A covered call is a bearish trade, and I'll do a different video about that, but let me just tell you that what you try and do is you want to keep the shares. It's the exact opposite of a sold put. So it's a bearish trade. You believe that it will not hit that number, but you want to collect a little bit of money and keep your shares because it's an investment. It's not a trade, and there's a difference. And when you're going to sell a covered call and it's not a trade, you care a whole lot more about holding the shares than you do about the premium. If you make $70 on Microsoft, well, great. That's like a dividend. Thank you very much. But so selling the covered call after an earnings report for me is for investments. But what I'm doing right now is what I'm going to demonstrating here is a trade, and that's where I set the trailing stop instead. So let me go ahead and show you what a trailing stop is. So let's say that I go over here and I hit trade, and it's Advanced Auto Parts. I can sell, like say, sell all, and then limit. There's different things. You can do a market order, which is get rid of it right at the market. You can do a limit. You can do a stop, saying stop when it gets to this price. Stop limit would be, I don't know what, I never used it before. And then there's trailing stop. So the trailing stop, I'd say I'd do it 1. Instead of points, I'll say 1%. So let me go ahead and demonstrate what that means here. So let's say that after earnings, Advanced Auto Part goes to $230 a share. From where it is now is like $223. So that's entirely possible. It's a pretty small jump. In that case, I will have made $602 on the share, plus $300 on the sold put. Give me a total $902. But I can possibly make more. This is what I did for UPS. I made another $700 on UPS doing just this. I can possibly make more with a trailing stop. A 1% trailing stop will stop me out at $227.70. So 1% of $230 is $2.30. So if you subtract $2.30 from 230, you get a stop of 227.70. So I set my trailing stop after earnings on a trade and try and run this thing up. But like in the case of UPS, it just kept going up and up and up, and I just kept making more money. As it goes up, your 1% trailing stop also goes up with your share price. So advanced auto, let's say it goes to $240. Like I set the trailing stop at 230, but it just keeps running the same way UPS did. And it will not sell until it comes back 1% from the high. So it follows the price up until finally it comes back 1% from the high. So advanced auto parts could go to 240, and in this case, the 1% trailing stop would stop me out at 237.60. And so that's how I set a trailing stop, and that's how I get out of the trade. Then once I have my money, I look around for another opportunity, and then I go for that option. So let's talk about for a second here, because there's a problem that we're having right now that, like I was saying earlier about some of the people that get on, the social media and they're having issues. Um, there's a market psychology that goes with trying to make money. And one of the things is you don't want to be too greedy, right? So I've noticed that whenever I try and like make an options trade or something like that, that you don't want to get too greedy. If you get too greedy, then you're going to end up losing money. Um, I know that sometimes, like if I had not exited a position up 30% because I wanted 80%, I would have been down 80%. So don't get too greedy. Good enough is better than good when it comes to options. Options are something you need to get in, get out. Just make a little bit of money, and really get a perspective. It's fun to win. I mean, the stock market's fun. Let's not lie about that. It's addicting. Once you're in it, you're never probably ever going to get out of it. I don't care if it stops you out. You'll find another way back in. You're going to figure it out. And it is fun, but kind of get a grip about what money really is, and like, is it like when you're investing, great. If you're in 401ks, if you're in the S&P 500 analogs like the VOO or something like that, or if you're in Roth IRAs and you're investing for retirement and you're going to use this for live for the rest of your life, that's one thing, right? And then this is a fun thing. This is what we're doing to try and drum up some cash, and also we're putting away for retirement, but maybe not in the same exact way. It's not the same kind of investing. And then how much does this money really change your life? I know if I got a whole bunch of extra money right now, let's say I made 10 times what I have right now, what would it really change about my life? It probably isn't going to change a whole lot. Like, I'm I'm gonna eat the same foods. I don't know what rich people food tastes like, but I know it sounds gross. We're talking about like goose liver pate and caviar and a pigeon. I don't know how come a pigeon's a rich person food, but it only seems to appear on fine dining menus. But these are all things that I'm gonna eat the same food. I'm going to live in the same sort of house. I'm very happy with my house. I'm very happy with my cars. It just, my hobbies, like making these videos or whatever, nothing's really going to change about my life if I made 10 times the money, except for maybe I'd have two houses. That's probably the one thing that would change. I would have two houses, like have one here in America, and I'd have one out in the countryside. I like countryside of England, and I'd probably put it right next to like Bury St. Edmunds, a good bicycle distance from a nice lamb shish or something like that. I love English food. I know it gets a bad rap, it gets a bad rap for whatever. But English food is delicious, and so I love it. And I'll tell you right now, I never reveal this, but as a profession, I'm a dentist by trade, and so British teeth are just fine, folks. They have an older cohort that's kind of toothless, but they're younger, the same as it is in America. You can take my word for it. I've lived in England for many, many years, and they're really nice people, and they're great quality of life, very funny. And I do like it. So I'd have a house over there, I'd have a house over here, and that would probably be the only thing that would change about my life with a ton of money. And then one of the things that people don't ever want to admit is when they're wrong. And so I don't know why it's hard for people to admit that. I am more than happy to admit when I'm wrong. Like, if I'm wrong, whatever. But I'm going to show you one of the best trades I've ever made. Let me see here. And that's on this PayPal. Oops, let me go ahead and stop the share here. And let me see if I can find it here. On PayPal. And this is one of the best trades I've ever made. And it just so happened that I was essentially wrong. I was wrong about this trade. I said, fine, whatever. But when I look at PayPal here, let me see here. I haven't looked at how much I've ever lost on this here. Let me see all. I lost $2,831 on PayPal. This is probably my biggest loss ever, is $2,831. And so what I did was I bought it for $228. And I said, well, I guess I'll sell it for $201. And then I said, well, no, I'm going to get my money back. So I bought it for $201 and then I sold it for $200. So basically, I was just like, I threw my hands up and I said, you know what? I'm wrong about PayPal. Okay, great. I had 100 shares. I lost times 27 or whatever. That gives me like $2,831. I said, no, I'll make it back. I'll buy it back. And then at $201, surely it'll go up to $215 or $230 because it's PayPal. Look at their price to earnings. Look at what they do. But then you start thinking about PayPal, like, well, who are their competitors? Well, it's everybody in the world's their competitor. It's Square, it's Clover, it's Visa, MasterCard, Affirm, Toast, Stripe. The list goes on and on and on and on. They are the opposite of Advanced Auto Parts. They've got so much competition. But I was able to cut ties with them at $200. And if you look at PayPal today, I don't know what they're trading. Let me just see here. PayPal stock. They're trading $115. So I saved a lot of money, whatever, $8,500, just by saying, you know what? I'm wrong. Even if I didn't feel I was wrong, I was like, if you look at PayPal and you look at their price to earnings and all that stuff, you'll say, oh, well, PayPal is a good price. It's 33 times, 20 times, 25 times forward PE, but they have a lot of competition. And maybe now they're being re-rated against banks rather than other fintech companies. Maybe they're looked at now as a bank. You look at their statements and you see that PayPal goes up year after year. Yeah, it sure does. It's got decent growth, so it should trade at a premium. But you know who doesn't think that? The market. And so when I lose $28 a share on a stock, I throw my hands up like, you know what? I was wrong about this one. And so that for me was a humbling experience, and it's one that sometimes you just got to say you're wrong, okay? And that one saved me $8,500. And last but not least, go ahead and just try to enjoy the stock market. Think about it. I mean, think about what you can own in the stock market. Isn't it a privilege? Like, if I walk into a Lowe's, I love Lowe's. I have a soft spot for them. So I love Lowe's. I walk in there and I say, I can own part of you. I can own a part of Lowe's. And to me, there's a privilege that gets associated with owning a company that I love. And I think it's awesome that I can go in there and have a piece of it. And I don't even have to work there. All I have to do is just go on the internet and buy it. And when you own it, like I just did there with PayPal, and able to look up their financials and stuff, just kind of understand what you own. Because when you understand it, like I have Google right now, which I don't even know what the price is, and I don't really care. I know I'm eventually going to get all my money and then some off of Google. But but understand because I understand the valuation of Google. I'm not on margin, and I understand Google, and it can go down as much as it's going to go down. I will eventually get my money back and then some. This I know. So it is a peace of mind to understanding what I own and understanding the valuation of what I own. And lastly, with the market, you know, have fun with it. It's a good time. It's a great hobby. Like I said, what I'm doing with this video here, just showing you everybody here is how I trade. Um, but for me, it's fun. That's what I do for entertainment. Um, so yeah, I would think that people would want to like and subscribe to this channel because there aren't too many of us making money at the moment, and I just happen to be one of them. So if you got anything out of this video, yeah, please like and subscribe, and then hit that little notification bell. Until then, we'll see you next time. Bye.